My next guest says buyers are starting to gain the upper hand as price cuts become a little more common and more inventory hits the market. His brokerage firm recorded nearly $3 billion in sales last year. Joining me here on set is Ryan Serhant. He's the founder and CEO of Serhant, and it is great to have you here. Thank you, seriously.
Of course.
I know you could be out in the Hamptons or wherever people are right now, so join us to talk about the housing market. Real quickly, knee-jerk reaction, you do think buyers are getting a little bit of the upper hand again?
A little bit, but I'll tell you, what we're seeing is kind of an overall sense of analysis paralysis in the housing market. Pricing is high, as we just saw. Pricing is up 6% year over year. Yeah. But inventory is also the highest it's been in 4 years, right? Inventory is up almost 20% over the last year. So you have sellers saying, I don't know what to do. You have buyers saying, I don't know what to do. Everyone's paying attention to what's going to happen in the fall. The Fed's going to cut rates once, twice. We don't know what's going to happen with the election. You know what? We don't know what to do, so we're just going to hold. To the detriment of the entire market. But smart people are jumping in and saying, you know what, I can marry the house, I'll date the rate, and I'll get what I want and negotiate.
Marry the house, date the... That was like a poem. Okay, so you really think people are paying attention to when rate cuts could be coming and thinking, why buy now if the mortgage is going to be that much cheaper in a few months' time?
Right. I mean, everybody does. Everyone looks to the news for a reason to not take action. Across the board. I mean, that's not just real estate. That's the world. Yeah. And so they say, well, if rates are going to come down, you know what? I'll wait and I'll get a lower rate. But then what happens is we have every seller in all of our markets. Serhant right now is up and down the East Coast.
Yeah, I can't believe
right? We're
how
in
big
10
this
different
firm
states
is now.
right now. And every seller we have, they're saying, you know what? Let's wait to list until the end of the year because we can list at a higher price because if the rates come down, then I'll have a bigger buyer pool. So every buyer is saying, I'm going to wait for rates to come down. Every seller is saying, I'm going to wait for rates to come down. And so what you're going to have is this analysis paralysis that we're seeing through the summer.
But to follow that through to its conclusion, then, if we suddenly have a lot more inventory on the market, and yes, more buyers, but do you actually think that cutting rates could bring prices down? Everyone thinks prices are going to go up as a result. I wonder if the opposite could happen.
Absolutely, because no one actually does what I like to call math. So if you really look at it, right, for the monthly cost of every $100,000 borrowed right now, with let's say a half a point interest swing, is $33.
Okay.
So people sit and they'll wait and they'll say, well, rates went up half a point, I can't do anything. Right. Or rates came down half a point, we're going to run into the market. And everyone says that's a material change. Right. It's not. It's
especially,
really not.
I imagine, for a lot of the buyers that you're dealing with. I mean, it is incredible to see how much you guys are all over. How many employees do you have now?
I mean, total, they were all in New York last night because we have this new show on Netflix. We had our premiere party in New York City last night. There's like 850.
Wow.
Yeah.
Incredible. Okay. What is the new show about?
It's called Owning Manhattan. I did a show on Bravo for 10 years called $1 Million Listing New York. And this is my next chapter, really. It is the redefinition, I think, of the genre of what it means to watch an occupational show. So we have the biggest real estate we've ever shown on TV. I mean, the show kicks off with a $200 million penthouse, and we show deals all over the city. And then it follows my company that we founded during COVID, during the pandemic, and our agents who are, they're very professional and they're very good at what they do, but they're completely insane.
Their personalities.
Yeah.
What you're describing sounds expensive, and we're showing a little bit of it, and it looks expensive, frankly.
I
mean, is that part of it? Was this a big price tag on Netflix's side of things in order to unlock that ambition of what you think the new sort of occupation show can look like?
No, I think New York is just expensive, right? I think real estate these days is expensive. And I think people want to be able to look into New York City from the top down and really watch the people that work in that industry. Remember, real estate agents are unpaid, right? There's no salary, there's no benefits. They have to wake up every single day and go out there and fight for the money that they're going to have to be able to pay their bills. And watching that on TV from the comfort of your own couch, wherever you are in the world, is a stress-free way to watch other people be really stressed out.
I'm sure you've been asked about it already, but the impact of this potential change where suddenly commissions aren't necessarily going forward what they were in the past. I mean, like you said, people have to put food on the table. Do you think it's a big risk, or is it going to change the way people do business?
I think it's a transparent decoupling of the way commissions have always been handled, right? You have a buyer who's paying a deposit, and a commission will be paid out of that deposit that's sitting in escrow. That's how things are closed on the one day. And then you have sellers who are kind of looking at that kind of net price. At the end of the day, it's all net price. Someone's going to pay all of the fees, and you're either going to split it between the two. It's the same thing with taxes. If you're going to increase closing costs in a place like New York City or anywhere, someone's going to pay it. And it's either going to be the buyer or the seller. It's like minimum wage. Someone's going to pay it. And it's usually on the consumer, even though they're the ones who voted for it.
Interesting. Ryan, it's great to have you here. We look forward to watching some of the new show and seeing what the market does for the next 12 months. I think it's anybody's guess. But you think in general then it's going to go price? Do you think people buying now, they're not going to regret where prices are? They're not going to turn around and say they fell 20%. What happened? Like, is this a permanently higher plateau?
No, people love following the crowd. Every market has an innovator, then an imitator, then an idiot. And so we just have to look back in hindsight as to which one we're dealing with right now. I think things are negotiable, and that's what you want. You don't buy a convertible waiting for it to rain. So don't do that, and you'll be good.
All right.